When we are talking about presentation of financial statements, those are what we have. We want to show the financial position, statement of financial position of the organization. Again, we want to show the statement of comprehensive income, as well as the changes in equity, even cash flow for that matter. Apart from that, we also have notes that are going to indicate how we have done the calculations at a certain maybe column. So these are some of the things that we are going to put when we are doing our presentation of financial statements. So we are supposed to know that. Then we start with the profit and loss for the period. Profit and loss. That is the statement of comprehensive income. The profit and loss is the profit and loss is the comprehensive income that we have talked about, and in most cases it is the significant indicator of the company's financial performance. So we are saying the profit and loss account shows the financial performance of the company. So it is very important to ensure that it is not misleading. What do we put in the profit and loss? What do we write in the profit and loss account?
Expenditure.
Yes, the expenditure. As well as income. Yes. How can you see that you have made a loss or have made a profit? Because the expenses as well as the income are there, so we subtract and then see the performance of how we've done. So when we are talking about the profit and loss, we stipulate things like income and expenses for a recognized period of time. For example, we can say for a year, that is what we can talk about. The other thing that we should look into is how items are disclosed. How items are disclosed. If we're talking about the financial statement, we're talking about International Accounting Standard number 1. That you should not forget. That it is the standard of accounting number 1. So the International Standard Account number 1 specifies disclosures of certain items in certain ways. 1. Some items must appear on the face of the statement of financial position or statement of comprehensive income. Other items can appear on the notes of the financial statement. Instead, recommended formats are given which entities follow. So what are we saying? We are saying that there is a special format that we are supposed to follow, and not only that, where we show that this is the position or else something to do with the comprehensive income for the entity. So what do we identify in the financial statement? The entity should identify each financial statement and the notes very clearly. The International Standard 1 also requires disclosure of the following information in a prominent position. If necessary, it should be repeated whenever it is felt to be done. 1. The name of the reporting entity. Name. You can write any one of the financial statement position, or when you are presenting, you can't just start presenting. You are supposed to write the name of the entity. For example, University of Lilongwe, because that's the identity for anyone that is going to read. The second thing, whether the accounts cover the single entity only or a group of entities. Other companies have subsidiaries whereby you are supposed to show that a branch also is supposed to be shown in the identification of the financial statement. If it is a single entity, it doesn't have subsidiaries. The other thing is the date of the end of the reporting period. How long have you reported? From the 30th of November. So we should not be forgetting such things, because that is again where we are going to see that this is the period how we have performed. The other thing is the presentation of currency. As I've already said, that other entities or organizations have subsidiaries even outside the country. So you are supposed to show even the presentation of their currency, to say this level was converted to that according to where you are importing from. For example, you have got a subsidiary in South Africa, which is for University of Lilongwe. When you are presenting financial statements, you are supposed to show currency from there, and then converted maybe to Malawi currency or Malawi currency to South Africa, based on the where you are reporting from. And then the other thing is the level of rounding used in presenting amounts in the financial statement. You are supposed to show that this is how I've done the presentation of financial statements, by showing the amounts in the financial statement. So that is what they are telling us, that we should really write it clearly, and it has to be very, very well presented. Reporting period of the financial statement. It is normal for entities to present financial statements annually, like as the International Standard 1 states that you can report annually. And then you are supposed to give reasons why a period other than 1 year is used if you have done that. Sure. Tell us why you have not done the 1 year period. You are supposed to tell us reasons why you have done that. Again, the fact that the comparative figures given are not in fact comparable, we are supposed again to say why they are not. That's why there are things not to say. For example, you have a column whereby there is, let's say, 350,000. But in the true sense, it is not supposed to be that. Then you put down in the note, you explain. Let's say, for example, this is column number 3. You say note, column 3, which is 75,000 minus 7,000. You can give a reason why. So that whenever they are not the same expected figures, you should notify the one that is going to read to say, this has been done, or doesn't tally because of what is done there. This time it's very easy when you are on Excel. For example, you will say equals 75,000 minus 30,000. Then 35 comes on its own when you have gone on the Excel sheet by putting a formula. So somebody, when he is very conversant, he can just click there or put a note, a comment to say this is what I've done. So that when somebody just clicks there, should have that notification that the Y figure is right instead of the normal figure that you would have been there. Timeline for the presentation. If the publication of financial statement is delayed too long after the reporting period, their usefulness will be severely diminished. The standard states that the entities should be able to produce their financial statements within 6 months of the end of their reporting period. For example, your financial year or your financial period ends on 30 December. It means before July you're supposed to report. Even tax, when we are talking of tax, that is again supposed to be within 6 months after you have finished the period. So us as the reporters on finance, we should know also the timeline that we are supposed to report. Because if it exceeds that, they're going to question you, why have you not reported? They cannot query you in January if it ends December. But after June, you are supposed to be answerable why you are doing that or you have not done the reporting. Statement of financial position. That's the first one. Statement of financial position. We've been given an example where it states the financial position of a certain company in our book. Always, as the reporters, we have to know, we learned with the Samuel, that when you are reporting, always you are supposed to compare. How? By taking the 2 years, corresponding years, that according to accounts that we did last year, we were here. And this corresponding year, we were here. And there, when you compare, that's when you give the report or the position of the company. So I think firstly we just have to see this example. I don't know. Do you see that? Financial position. Presentation of financial statements is what we're learning. Then now we're looking on the financial position of a certain company. So, as the example we did, we just have to write the name of our company. Which company are we? Tell me anything. You see, Zinalino company has many just for an example. Brothers. That's the name of the company that we are going to deal with today. So we're writing statement of financial position. Financial position, but we should not forget the end period that we're talking about. And at this period. That's for our example. Then, as we all know that we are supposed to report for 3 years, always, as a reporters, we should also know that we are supposed to report on 3 years. Which years now, corresponding years that we should work on? That's going to do. Any year that you want us to work on, the corresponding years? 2023. But don't take for a, maybe we should not take 23. Why go to our not reaching the same? Okay? We should go behind a bit. Chukani katika 2023 muzakanga ndudi nduwika numuntu munena kuchaka chisanati mumati kuchita report, which is not true. You get the point? Good. I hope you have explained well. You see that? So we should not give examples of years that we have not finished, but in 2021 and 2022. Is it? Because all December are gone. And we are again more than 6 months that we're supposed to report. Good. So we should just have that easy example. We start with the assets. We start with assets. And then when we start with assets, we have the non-current assets. We have the non-current assets. According to our book, they're telling us that we have several of them. We don't have one. We have the first one, which is the property, plant, and equipment. Property, plant, and equipment. Then, as they are saying this, they are telling us that we have about 350,700. But these are maybe in millions, okay? 350,700. That was in 2021, but in 2022 we had 360,020. 360,020. And then on the same current assets, non-current assets, we have the goodwill. If we talk of non-current assets, the other name is what? No, non-current assets. We have non-current and current. If we talk of non-current, which are these other names? This is what? This is property one. These are plants and equipment. The other name of things like those in church. Come again? No, fixed assets. Non-current assets. So, why did I ask you that question? Goodwill. Goodwill, teacher. Gina, I'm going to hear. Goodwill, teacher. Goodwill. Zona? Goodwill, I'm just something. Goodwill. Come again? Goodwill. What is it? Goodwill. Is whereby we will take an example, okay? If somebody, let's say ShopRite akatya kuli management, and akakade feeling kuti zenzikikhala mulika bamulakya that ShopRite, is it? Huh? It's the reputation that that company gives to people, the impression that people get from the company. And it's an asset. It is an asset. Because when you are selling a company, you also sell. When I said that this is dinner, I go my reputation, you may not pay the point. So it is the reputation of a business that is there and that can be calculated to be valuable, to have value. So we're talking about that as the part of the current assets whereby it's 8,800. This other year, 80 what? 900. 8,900, and then this other year, no 800, 91,200. 91,200. Then we have the other intangible assets. Whereby we have how much? 22747 shares to 50 years. And then we have this other year, which is 227,470 again. And then we have the other one, which is the investors in associates. Investment in associates. Associates, which is 100, 150. 100, 150. Other year, 110,770. Then we have the other one, which is the available for sale financial assets. Available for sale. Assets, which is the 142,500. Then we go to other kinds of assets. Current assets, according to the additions they have. This is the 901620. And then we have 945,460. Okay. Then we have the addition of non-current assets, and then we have current assets. We're still on the column of assets. Assets have got two columns, which is non-current assets, and the non-current assets are those, and then we go now to current assets. Current assets also has got somene, which is the current assets in inventory. Priscilla, inventory, current assets. What are they current assets? Pigana kazi kitu ya hapa kungolemba omukipato just find that again. Not that it's paper anymore, but remember for here. You get the point? Good. So we have inventories. Why we see that inventory current assets. Because what? They change.